All right, guys, welcome back to another episode of Chart Talk. We're going to jump right into it. We had a little bit of a late day sell here in the indexes. Again, off the open this morning, things looked pretty good. And then we had a little bit of a late day sell off. So again, we'll start with the S&P. Again, the key thing really has been we want to see these buyers stepping out. So 650 has been the key out going back to September. More recently, we've seen buyers start to support this 660 area that we saw most of October and more recently in November. And we've been talking the last couple of weeks about this shift into more of a topping pattern, more range bound, expecting more of a, broader bull flag to form than the breakout channel that we've grown somewhat accustomed to over the past couple of months. So here we have a very clear breakout stage. That's been pretty much very easy trend since May. And then, beginning in September, we've started to see that shift into what looks to be more of a broader bull flag that's going to start to form here. And we should just expect a little bit more range bound action. Again, for now, we really want to see the 650 support area hold. Again, it can easily break, but that's the key spot right now. We're seeing that shift out of the breakout stages into more topping patterns, and it's very apparent in the index. We saw that in the S&P. We're seeing this same thing with the Qs. Right now, really this 590 in the Qs is like that same equivalent out. Maybe the potential start of a head and shoulders, but in reality, it just seems a shift to more of a topping pattern with the indexes, just like we saw, kind of over here with the Qs, it flags out, tests support, and then it starts that next push higher. So for now, it's really, for the S&P, the big number is 700 in the SPY. The key up we want to see hold is 650, but if that area shakes out lower, so for now, we want to just be aware of these ranges and, be prepared to buy back up their support when that time comes. So again, last week we did see some strength in some of the large cap names. Again, we can see this is here the Dow 30. Dow 30 was the only major index last week to put in new all-time highs, but it still stayed, well within the breakout stage. So we have seen a little bit of a rotation out of some of the higher beta, tech names into more of the, larger cap, kind of safer names, so to speak. So still keep an eye on some of these Dow Jones names as they're still very clear really in this breakout stage. They really haven't shown those topping patterns as the index like the S&P and the Qs have shown us. Again, gold, we've talked about how we should expect this flag to form as well. Again, just like we saw with gold breaking through 3,000 an ounce, we should expect with time to see a new flag forming through 4,000 in time. Again, we've been keeping a close eye on the dollar. Had a little bit of a pull in last week, but it's starting to form a little bit of a higher pivot low. And again, we want to see a weak dollar. We don't really want to see a dollar basing and breaking out. It's not a great sign for the market. For equities, we want to see this breaking down, but we're not really seeing the price action to dictate that. We're seeing, we're expecting more of a breakout through this base than a breakdown, just given the price action. So a couple strong sectors. Again, semis have clearly been the leaders lately. It does seem that they're starting to show a little bit of weakness here. Again, as extended as this sector has gotten, we're seeing how this really is probably the end of this run up. Again, this is an extreme, this is 100% run up in this 6-month run. The sector needs to pull back and reset. So very extended at macro resistance, pulling back in, all the signs that, showing us that, this leader ran its course and, someone else's, another sector will step into play. few other strong sectors, again, healthcare and biotechs have still been very strong. Again, healthcare is just running back to its prior all-time high. Again, we often see resistance at these first retests. Again, we were keeping a very big focus on healthcare through this breakout down here earlier in the, or I guess, end of summer. So now is where we're seeing kind of this profit-taking area when we get this retest of these highs, and biotechs as well, very clearly still in this breakout stage as it works its way back to its all-time highs, just like healthcare. So healthcare and biotechs both climbing back towards their all-time highs. Semis already kind of pushed through and kind of pulling back into their relative range. Again, trying to avoid more of the semis, looking to take profits in healthcare and biotech. And then you have a lot of sectors setting up similar with the market. We have REITs, looking as if they really want to break this macro support area, just given all these higher lows we continue to see. Some more notable sectors, healthcare, we're seeing that same shift like we saw with the indexes, where we're just seeing that shift into more of a topping pattern here. Energy names have been, pretty strong recently. We're going to go over a couple of those names later, and we can just see, as strong as they look, this is a very macro level of resistance here. So if it does break, we could expect to move higher, but it's been resistant for so long that wouldn't be really expecting fireworks to this breakout, given how long it's had resistance in this area. Another sector to keep an eye on is this consumer discretionary sector. Again, we need to see this kind of shakeout here. So highlighting the newsletter this weekend, expect a shakeout of support before we see this breakout. So again, chart-wise, expect a shakeout, but still technical looks very strong for a breakout down the road. So again, few key sectors to most certainly avoid. Right now, consumer staples have just been showing us, the buy is the test of the 200-day. We're seeing, the overall lower highs, and it's just aging over week after week. So really just waiting until we see a test of the 200-day and really kind of shake out, this prior area of support. And materials and financials both continue to be very, very clear avoids. Materials have been in this very clear breakdown stage for about 2 months now. No signs of getting out of it anytime soon, so steer clear materials. And financials have been trying to kind of poke out and show some strength, but still very clear stage 4 breakdown, clear reason to avoid sectors like staples, materials, and financials, where the only kind of really saving grace sector-wise really seems to be the energy sector for the time being. Again, you have one bad candle today or one bad weekly candle, everything looks bleak, and then you have one good, bullish engulfing candle that follows the next week, and everything looks amazing again. So I have to just take it week by week, but we have been seeing the weakness internally for a little bit of time now, so not the biggest shock to see some weakness out of the market. Again, with the higher beta tech names that have again kind of taken to the woodshed, Tesla was in that same camp as well. Again, we look back, beginning of November, looked amazing, nice flag through 470, but is pulled back into this broader range. Again, it did shake out the kind of key areas of this trade going back to last quarter, and we did see buyers step back up again. We bought this through this 360 back in the end of September, and on Thursday it looked like this trade might have been reversing for a break-even trade. I did add a little bit on that Friday or Thursday low at the end of the day, kind of just a shot. And again, we had the gap down on Friday and then a nice little reversal today. So for now, really, this 380 is the key out. And it seems to be that Tesla's just, flagging out. It's letting the 200-day catch up. But we really don't want to see this break. Again, this bounce back move here. You don't really want to see this coming back down to support again, because if it does, this is probably going to become, a failed trade from that entry. Now, on my end, it'll be a break-even trade. I'll get out at my cost basis, but if we can see this 380 hold as support and this wide new range here act as the new flag, you're talking about a 80, 90 point range. If this area holds and we continue to flag out between this 100-point range, it really sets this name up for a dramatic move higher based on this measurement. So a lot to consider, but right now, really, as long as we stay above 380, we live to fight another day. Moving on again, we keep talking about this Roku, still setting up, not ready just yet, but the key thing here, most importantly, is that this 200-day, which has acted pretty much as resistance in this entire base, is now starting to act as support. So as Roku continues to pull in, we want to see buying come in around this 200-day and then pivot and turn back up through this, 110 macro base break area. So really want to keep an eye on how it reacts at 200-day and wait for that pivot for the entry down the road. Walmart, again, we're talking about the Dow 30 names, focusing on those and less on the high beta tech names, Oklos or the teams. And weekly, chart look phenomenal does have earnings on Thursday. So this 104 breakout, maybe earnings takes it away, but Walmart isn't really a name that's going to have anything crazy when it comes to their earnings. It's a very, consistent business for the most part, but still not trying to gamble with any of these names going into earnings. So waiting till after Thursday and then keeping an eye for that potential, opening range breakout through 104/105 for the name. SoFi, again, not ready yet. 200-day, still trying to play catch up here. We do like these names when they get through these IPO highs, which SoFi has done, but still in a very, very wide range here between 25 and 32. So 32 really is the key breakout area. We've had the first attempt, we've had the retest. Now we just need it to set up further. So keep that on the radar. Some good and bad trades from last week. We had pretty nice entry in this BSX up through 100. And we had, pretty much, the whole week as the market was pulling in, this name just pushing higher. And the mistake on my end was not really having offers out. My ideal target was really to take profits above this area, was really to, see some continuation through that prior high and then look to take profits here. Going into Thursday, that seemed pretty much on point. We got that weakness from the market, end of week spilling over into today, and it kind of pulled back in. So, a little bit of a mistake there. Again, this still made money in the trade, but could have had, some offers into this run up, third or fourth day up, but is what it is. So we got stopped out today when it broke down below the prior low a day. And if this name pulls back in and pulls into this 200-day, we'll look for another trade in it for that next attempt back up through this 110. So, 2% gain. I'll take the win with the action we've seen at the market the past week or so. So kind of it is what it is. And then we have this Costco where a good friend of ours is actually short this name. Again, name's been pulling to support, and you really want to see this break of this downtrend, which we did not get. So we bought it on Thursday up off sport, super tight risk here again. And we're talking a $900 name. We're risking less than 1% buying it off of support for potential break of a macro downtrend, but wasn't ready. So was a break-even trade. We bought it up through 920 this day. And then, 2 days later, breaking back down through to 920 again. We got our break even. And our friend Andrew is now short this name, and he's taking the trade the opposite way, shorting with a stop versus 930 for the break support, which I like that trade much more than us buying it. So good luck with him with that short trade in Costco. All right, so next up we have just a recap of a couple big picture alerts from this week. We have this Regeneron that our buddy Joe is in. We had this alert through, again, for Regeneron, big base here, gaps up on earnings, 200-day catches up, 200-day starts to act as support, and nice little bull flag post earnings. So very textbook pattern that we look for. A nice breakout, continues to push higher. And, we have this short-term target of 750 for now with the name. And, healthcare has been strong. Biotech's have been strong. Market has been somewhat weak. Regeneron does not care. So focusing on those strong sectors and then focusing on stronger charts within those sectors. Next up, we have this Microsoft, which is still setting up. Again, shifting towards some of those larger cap names. Again, Microsoft really not a high beta tech name. It's kind of, older name in that space. And we have this nice support buyback setup. Again, we can see support at this 490 area since July. See the 200-day catching up. See very clear resistance about 10% higher at 550. So just keep an eye on this 510 area. The next time it gets up there to buy through it for that slow climb back to 550. And another one from today was this DY. It didn't technically trigger through the entry, which would have been through 300, and we can see very textbook, 30-point range of a flag here, flagging under all-time highs. And again, this is a key reason why we wait to buy above the whole number. So the entry was above 300. The high of day was 300 to the penny. There's still a seller there. And that's why we look to buy above 300. So 305 cents, 310 cents. That's where the entry would be, not buying perfectly 300 to the penny. So moving on, just a couple names to keep on the radar, or names that have kind of been in the news. Again, it's Apple, big, big flag here, very tiny one here. So this little baby gap after earnings, not really expecting much. Probably expect a similar move like this. What we're seeing here, expect a little pull in again. Just when they get this tight, you need, the reverse moves before they're going to push higher. Again, Meta continues to be a massive avoid. Very clear breakdown stage that we saw beginning of the year, seeing the same breakdown stage again on the 200-day. Avoid this as much as you can. Again, Netflix is not down 90% today. They did their split. We've been talking about this for the last week or two. Avoid names for at least a month after they split. So today is the official day of the split. They're now trading at $100 a share instead of $1,000. But this is nothing to do with the change of the company, other than just making them appear more affordable to the average trader. So avoid Netflix for the next month or so. Let this split get shake itself out and avoid it, for the time being. Again, we talked about a lot of these high beta names that have been, kind of getting taken to the woodshed. We can see with this TEM, very clear range it's been trading in. I have this like kind of blue line showing like the easy times with this name, where it's just kind of been, trending higher. And now we're starting to see a little bit more of the tougher times when this name pulls back in, which it's done many times in the past. So still very much an avoid, still, not worth kind of putting the risk on in these sectors. So just let this name kind of settle out more. Wait till you see more of a pull in closer to its macro support, then buying it on the way down in the middle of the range. BMY was a name a member had gone into a few weeks ago with a phenomenal entry after earnings, and he was looking to buy it this day in particular, and we were talking and asking him why he was looking to get into it, and it was, long story short, it was just because, he was in it for 15 days in a row, and it kept going higher. And we showed that this really wasn't a reason to get into it or add more to it, and more importantly, just to wait for the break of this base. So going into it that day, he was very eager to buy it, but we don't really want to buy dojis at highs after these kind of run-ups. And very quickly the name reversed and pulled back half of the up move in 2 trading days. So definitely he saw the reason why we want to wait for defined setups. Really, any entry through here would have been fine to add, but to chase it after the amazing run up, not really the time to do so. So again, you want to find great trades, but also know when to not add to them, which can mess up, the trade. So again, we're talking about some energy names, energy sector being very strong recently compared to most of the other sectors in the market right now. And this FANG has had clear resistance going back since April around this 150 area. It continues to get up here, and there continues to be a seller kind of holding this name down. So 200 days coming in, still acting a little bit like resistance, but we have seen the buyers starting to step up here, where most of the time this 135 was support, and now more recently we're starting to see this range get a little bit tighter, a little bit more of a tighter flag here. So keeping a close eye on this FANG, this Venom, Viper Energy, another energy name that is setting up again. Today's close looks horrible, but whenever it wants to push through 36, looks great. Again, this core was a member idea. Now, the point we were trying to illustrate of why maybe right now isn't the best time is we saw this name take months and months to set up. Very textbook flag, has already exceeded the measured move of that flag. It's now starting the next flag, but we can see this took 6 months of setting up. This has been 6 days. So this name clearly takes time to flag out. We can even see if we go back some more, we can see this name when it wants to flag, it takes its sweet time. So we can see 2 different macro flags. This is over a year long, and then this one is nearly 6 months long. Now the flags do shorten in their duration of time as they climb, but you're not going to go from a year consolidation to a breakout to a 6-month consolidation to a breakout to a 6-day consolidation and a breakout. So still needs more time to really set up, even if it takes 3 months. You need to really expect this to be the range of this new flag before we really see any push through these 370s. So that 370 area. So be very cautious there. Again, just look at the prior consolidations the same has shown us before it goes. And you can see the 200 day gets pretty close with each breakout. When this name, the 200 days pretty much catching up to the prior breakout. So this name definitely takes some time. Don't chase it today versus, yesterday's prior low day. Moving on, we have this RTX, nice earnings flag forming here. Keep an eye on this 180 again. We talked about when these things report earnings, give them at least a month to set up. So still need a bit more time, but through that 180 looks very good. Next, we have this XEL utility name. We're seeing, that same flag forming again, like we saw back in October. So flags out, breaks out. Same secondary flag forming again, tighter range. But again, we're seeing a similar duration of time forming with this flag as we're seeing the second time. So it's already developed, and now you just wait for it to get tighter for the entry. Next up, we have the CACI, all-time high breakout through 600. We can see the 600 was resistance a year ago. Took a year to get back up here. And now it's in this, tight, 5% range here with earnings out of the way. So we want to keep an eye on that blue sky breakout through this 600 area versus this 570. And then last but not least, we have this CBRE. Again, a lot of these names, the charts look a little broken based off today's close, but all we care about is the entry back up through the support area. through this 156 in a week or two is more of our concern than, the sell-off today, because we just we care about it when it gets back up to resistance, not on the way back down. So again, this week we still have a couple of names reporting earnings. Some notable ones: we have Home Depot this week, we have MDT reporting, we have Baidu reporting, we have NVDA, which is probably the most important name of the week. It's going to be reporting. That should really dictate, where the market's heading, even how much of a weighting NVIDIA has on the index. So would not be trying to gamble this into earnings. Also really wouldn't be expecting any major gap ups into earnings, given this name has been somewhat lackluster in the semi space pretty much since the summertime. The semis really have gone on an extreme run up this last quarter, and NVIDIA hasn't really done much. So wouldn't be expecting much. Maybe best if it's a really good beat, some good forward guidance, probably get a gap up to retest these prior highs. And if they, don't have kind of a blowout quarter, probably expect some kind of gap down closer to the 200-day, closer to this area. So if you got a, nice beat, best case, in my opinion, really is kind of a push here. And if they somehow don't report the best earnings and guidance, probably a move closer to the 200-day or near this, kind of 164 area. So it's kind of the two areas I'd keep a close eye on. Again, a few others, it's PanW is reporting lows this week, another one, Target, and Intuit. Again, there's a few other names as well, but these are some of the more notable or bigger names reporting. You need to keep an eye on those. Again, what the action we're seeing, expect this shift into more of a topping pattern, more range bound. You want to be thinking of buying the shakeouts at support and selling into resistance, basically buying ugliness and selling when things look beautiful. You get that gap down reversal. These are, the times you want to look for the entries. And when things look great, you get 3 or 4 day run-ups. Those are the times to look take profits. A little bit different of what we've been accustomed to with the breakout market. But with this range bound market that should be coming, again, you just got to trade those ranges. And, trades like VSX are a good example of that, where, you buy it, you take profits, you buy it back, you take profits, and you just take advantage of those ranges instead of the buying all-time highs and holding it to newer all-time highs. So hopefully this was helpful. If you found this any bit insightful, drop a little thumbs up, and we'll see you next week.